banks might disappear. Yes, you heard that right. By 2030, 80% of them will cease to exist. That's quite unbelievable and even frightening, isn't it? Here's the thing. Banks are kind of stuck in the past, and tech is sprinting ahead. It's like trying to use a flip phone in the age of smartphones. It's not going to work long. Now, your one device could replace any bank branch.
But now banks face a challenge from a totally new set of rivals, ones that have technology at their core.
As you know, today's economy is based on banks. But wait, usually, if you take away the foundation, everything collapses. Will it be like that with the banks as well? In theory, it could be. But in practice, things are complicated. Why? Let's find out. If I ask you, which country has the most banks, which one would you think of first? I'll give you a hint. This country has the largest national debt worldwide at $33 trillion, right? It's the US. There are 4,844 different banks with almost 79,000 offices across the country. But hey, that's not even their highest number. Before the Great Depression, the US had a jaw-dropping 25,000 banks. Crazy, right? The US economy is very dependent on the banking industry. But why do we need so many banks today? And what would happen if the modern system collapsed? These are pretty valid questions. But first thing first, you might find it a bit odd, but there's a reason the US has an absolutely crazy number of banks. Before the 50s, there were rules that said, nope, you can't set up bank branches across state lines. So what happened? Well, every state just went ahead and started its own banks instead of just adding more branches. When this restriction was lifted, banks began to spread their wings to other states. But why does the US still have so many financial institutions? Well, think of banks like the heart of the economy. They keep the cash flowing just like the heart keeps pumping blood. Here's how they work. A bank's job is to be a safe place where you can stash your cash. And they say, sure, you can get your money back whenever you like. Although there are times when you may have to pay a fee if you grab your money back too soon. But as long as your money is with them, they might even pay you a little thank you interest. But that money doesn't just sit there gathering dust. The bank turns around and loans it out to other people. Maybe someone who wants to open a pizza shop or a family looking to buy their dream home. They charge these borrowers interest, and that's where things get juicy for banks because they charge more interest than they paid out to you. Now, imagine a giant web where there's money flowing nonstop. Companies borrow to grow and hire people, and people earn their paychecks and maybe borrow for a house or college. This works together as a connected and unified mechanism that drives the economy forward. Yet, when this mechanism falls, everyone suffers. Today, many say that banks are a little behind the times, like when you're stuck waiting for a money transfer that takes forever, or you're not happy with the service, or worse, your personal details end up who knows where. We have all been there. Listen to this. 60% of us believe that banks are just stuck in their bureaucratic ways. At the same time, 93% of customers will like their banks to actually understand what they need. So, what makes people want to switch banks? About 55% say it's because they worry about how safe their money is. And it's frustrating when you can't find someone to talk to in person or when the online services are too complicated. And I'm not even talking about bank fees. Did you know that more than a quarter of American bank account holders are paying about $25 every month in various fees like bank card maintenance, transactions, use of ATMs, and so on? Using an ATM, that's $5. An overdraft, that will be over $26. Want a bank account? Get ready to pay up to $15 monthly. Isn't that a bit weird to pay for the right to use your own money? Sure, I understand that it's because they're offering us a service, but is it a fair rate? And let's not forget about modern technology that is challenging the traditional banking system. Cyber attacks, identity theft, digital currency, and crypto are all hammering a huge nail into the coffin of the modern banking system. About 30 or 40 years ago, bank heists were the thing of blockbuster movies. You know, a bunch of masked robbers invading a bank, making a dramatic scene, and grabbing all the cash under the threat of their weapons. Sure, this kind of old school crime still happens, but these days it has mostly gone digital. And let me tell you, online theft doesn't care about borders or the size of a getaway car. In today's world, crooks don't need Macs or bags. They're swiping millions from the comfort of their computer chairs in a matter of minutes. Banks are now racing against the cyber bandits, trying to strengthen digital security and stay one step ahead. It's like a high-stakes cash me if you can kind of game, except it's your hard-earned money they're playing with. Take a minute to think about this. According to the Fed's 2021 report, if a cyber attack were to hit one of the top 5 most active banks, it could cause 38% of the country's banking system to collapse. Quite a lot, right? And the number of cyber attacks on financial institutions spiked by 63% in 2022 compared to the previous year. What's on the cyber thieves' shopping list? Well, they're after names, addresses, phone numbers, and bank card numbers. They snatch up this information to either drain accounts or sell the data to the highest bidder. And this isn't just a what-if scenario. It's all happening all the time. In 2019, 885 million personal and financial records tied to real estate deals were leaked from First American Financial Corp. Here is another example. In January 2008, Heartland Payment Systems was hit, and poof, 130 million debit and credit card numbers were in the hands of hackers. Then, in October 2014, cyber attackers broke into 83 million JP Morgan Chase accounts. So yeah, the FBI 2021 report shows that those criminals took nearly $7 billion from the U.S. financial playground, while banks were spending over $8.5 billion on cybersecurity. And by 2025, cybercrimes will cost the global economy a staggering $10.5 trillion every year. It's like a cybercrime blockbuster without popcorn. Banks' cyber troubles could make people think twice about where to keep their money. Is it time to put your savings in the jar or under your mattress? Well, many choose another option now, cryptocurrency. It's been a hot topic, so let's get into what is it about. Cryptocurrencies are basically online money. They don't have a central authority, which means no traditional banks are involved. Transactions are recorded on something called a blockchain, which is like a record book that everyone can check, but no single person can mess with it because every user has their own electronic private key. This setup helps keep things secure. When you send some of this digital gold to another person, it's just between you and them. No banks, no middlemen. Now, most people jump straight to Bitcoin when they hear crypto, but that's just the tip of the iceberg. Today, there are roughly 23,000 different cryptocurrencies out there, and that number keeps growing. Cryptocurrencies are a debatable topic. Still, it isn't going anywhere anytime soon. Why? Well, most crypto users are choosing them for a bunch of reasons, but let's talk about the big three. They are secure, private, and fast. First, your crypto wallet is like a personal safe because of blockchain technology. Second, you can say goodbye to filling out lengthy forms with all your personal details at the bank. Crypto only requires a username that links to your wallet, and the speed can make a huge difference. We've all been there, waiting forever for a bank transfer to go through. But with crypto, those transfers take a few minutes, and they're much cheaper. Despite its opportunity, opinions about cryptocurrency are mixed. 67% agree it is a legitimate form of investment, and then you've got 27% who think otherwise. For those who don't trust cryptocurrencies and are also dissatisfied with the modern banking system, there might be another solution, the digital dollar, CBDC, or the US central bank digital currency, which is the digital or electronic form of the US dollar issued by the Fed. So what is it and how will it work? Well, let's take a closer look. Basically, it's like a legal version of cryptocurrency, but it will be issued and regulated at the state level. How will the digital dollar differ from the regular electronic bank account? Because as of now, it sounds like the same numbers we see on our online banking accounts. Well, yes and no. In essence, CBDC will be somewhere in between crypto and conventional currency. Probably the biggest difference is that in the case of crypto, no one can really track every account. Meanwhile, the digital dollar will be powered and controlled by the Fed, which means that users won't be anonymous. And this is very different from the initial idea of crypto, which was meant to be independent of any state. Plus, the presence of third parties will reduce the security of the digital dollar, which is another challenge that is hard to fix. How do consumers feel about this? Well, that's a tough question. The concept of the digital dollar is relatively new, and people are still uncertain. Still, of course, those under 35 are more supportive of any innovative idea. In general, 1 in every 4 Americans say that they will try using the digital dollar. Apart from the US, 130 countries are exploring digital currencies, so some changes are on the way, and we'll definitely hear some news about that. Who knows? Maybe we will use different forms of currency very soon. It won't be the first time in American history though. Did you know that in its early days, the US did not have a single nominal currency as it does today? And there's more to that. In the late 18th and early 19th century, banks could issue their own currency. Of course, this didn't last long because if a bank went bankrupt, the banknotes it issued lost value and they were no longer accepted anywhere. So soon, the dollar was recognized as the unit of US currency. And in 1913, the US government created the Federal Reserve Bank. But what about the modern banking system? It was born 60 years ago, and it has mostly stayed the same. Since then, the most significant event was the emergence of online banking in the late 20th and early 21st century. This led to contactless cards, digital accounts, various mobile applications, and so on. And well, you know the rest. Although the banking system uses digital technologies, its ideology has remained unchanged since the middle of the last century. Therefore, it is not surprising that people are less and less satisfied. The service they get just seems oldish to many people. What adds to the dissatisfaction? The banking crisis we face throughout the history fueled this negativity a lot. For example, during the Great Depression, more than 9,000 banks failed. In the 80s, the bankrupt banks were worth over $390 billion. During the financial crisis of 2008, the total assets of failed banks reached $515 billion. And in 2023, a new banking crisis has already caused new losses for banks with total assets of around $320 billion. The biggest banking meltdown of the year was Silicon Valley Bank. For more details about the meltdown, feel free to check this video after you're done with this episode. Long history short, this was the largest bankruptcy since 2008 and the second largest in US history. Does this mean it's no longer safe to trust your money to banks? Of course not. The US banking system and the economy in general are some of the most stable ones globally, and some of the most successful investors even believe the banks are worth investing in.
A bank could be a perfectly decent investment.
Despite the risk of a financial crisis and an obsolete banking model, one of the world's most influential billionaires think banks have good perspectives.
Why banks right now?
They're businesses I understand, and I like the price at which they're selling relative to their future prospects.
For example, Warren Buffett has 8% of his asset invested in Bank of America, which is more than $27 billion as of now. So yes, probably the situation isn't that dramatic.
Banking is a good business if you don't do dumb things on the asset side.
But even this doesn't change the fact that raising interest rates will continue to pressure regional and smaller banks. That's why we will see less banks in the future. Will the others go bankrupt? Could be, but most of them will simply be merged with larger banks. So the best thing you can do for now is maybe consider some too big to fail banks to store your money. This is a good decision if you are concerned in any way. Other than that, we're good for now, but constantly moving towards the digital space. What do you think of the current banking system? Is it obsolete and flawed? Share your thoughts down in the comment section below, and we'll see you in the next video. Bye-bye.